Live streaming is on.
Okay, good afternoon, everybody. Event Trader here, and I got the charts from Jim, so I wanted to have them up as we go through and discuss the options playbook, the latest material with Brandon Mars, options trader, of course. Brandon continues to keep hitting us with some pretty nice trades over the last couple of weeks here. Definitely off to a good start in 2024, Brandon. So, welcome in here, and how's your day going?
Well, like I said to you before, Gavin, minus some lovely ice storms rolling through my state right now, I'm surviving. How about yourself?
Yeah, doing the same. No ice storms like we were talking about. Luckily for me, just yet. It is supposed to drop down below freezing though, so we'll see if we're going to get anything. But I don't think North Carolina could handle them too well. It doesn't sound like the power grid in Portland is doing you much favor either. At least Oregon, anyway, right?
Yeah, so a lot of power out, a lot of internet. So I've been without it this morning. So hopefully I'm not too off in my analysis. I was trying to analyze the S&P 500 charts on an iPhone earlier because of the internet. So hopefully I'm not too rusty on the call.
Yeah, it is funny once something goes down, and I know we've both been without our messaging service here today. My Trillion's been down and out. So anybody that hits me up on Trillion out there, if I haven't responded to you, please don't take offense. I haven't gotten any of my Trillion messages yet, although I think it shows me as offline anyway. But yeah, so it's just been kind of a loopy day on the whole internet front. It feels like. I wonder if Trillion has something located out by you that's causing them to go down today or something.
Well, I think 80% of the country's under a storm right now. So just throw a dart at the map.
Yeah, right. Chances are. Why don't we start off, Brandon, by just getting some of your thoughts on the broader market here? Been a choppy trading day, all flirting around the 200-day moving average. I got that at 47.95, or the 20-day, I should say. Apologies, 47.95 on the March, and the continuous is matched up with it at this juncture here. So continuous also running around 47.95, and really just been bouncing in back and forth between that all day long. So as we get deeper into 2024, Brandon, what's your take on the markets?
I mean, my overall take is still kind of in that bullish camp. The NQs and the ES holding up around that 20-day and kind of those key numbers that you just mentioned. So overall, pretty bullish. We'll go into this a little bit more in a second here, but did just fire on a put idea. Mainly it was just feeling like one of those days where my watch list was feeling pretty heavy almost across the board, and just started to see a lot more red than green on it, and it just kind of made me feel a little bearish just for the day. But overall, probably longer term bullish. And the longer that we kind of stick around these key levels and consolidate, I'd say in theory the more likely we are to turn higher, minus any major curveballs. But just feeling just kind of short term slightly bearish today.
Okay. And we obviously revised the rights to change our opinions as the day goes along, right, Brandon? As you said, very short term here. How about something more along the medium term front? Do you have any more conviction on that?
Yeah, and like you said, I think, don't we get the free pass of having an asterisk next to all words that we say about charts, just in case they all of a sudden change, like you just said?
Yes. We all can have the asterisk next to them. It's whether or not the subs give us the pass on having that asterisk that really counts, right, Brandon?
That is fair enough.
But yeah. So I mean, more on a medium term. What are you thinking out there?
Yeah, I mean, medium term, like the NQs in particular, I mean, they kind of keep, testing that, kind of the 17,000 level, as long as we don't get any sort of breakdown, again, I think the theory behind, just charts in the markets in general, the the longer that you kind of hang out around an area and consolidate with the trend, the more likely you are to go higher. So, medium term, still feeling, pretty bullish. Again, there are potential curveballs out there, more rumblings in the Middle East and all that. So, always kind of not trying to, bet the farm on anything, but, still definitely feeling like the longer term bull trend is intact. So just kind of still leaning towards that direction.
Yeah. So, okay. I would have to agree with you on both accounts there. So we'll continue to watch, see how this plays out. Earnings naturally is going to play a big factor. It's going to be a focus here in today's options playbook with our target. But first, let's break into some of your trades and, what you're seeing out there. So Costco is definitely of interest to me because you did have it on your call side early on, if I'm correct on that, Brandon, and then you went in with a put though. So I'd kind of be curious. Do I have that correct?
Yes, you do have that correct.
So I'd be curious at what you saw either in the broader markets, in the XLP, or in Costco that had you kind of switching gears there.
Yeah, so like you said, I definitely had this on my call radar. So I was just watching it in general today. And, I just started to see a descending triangle that started to form on the intraday pattern. And, we've talked about this a bunch. I'm a technical trader. I'm always looking for different patterns like this. So, one, I started to see something on the intraday. So that kind of caught my attention. And then, I usually check the daily chart too before I enter into trades. And I checked them on the daily entering into the day, and then I rechecked them prior to a trade just to clarify that point. And, Costco on the daily chart, and I mentioned this in my notes too. It was maybe getting a little bit extended short term, and it's got a little wick on the top there, which almost looks somewhat characteristic of like a false breakout, maybe a topping type tail. So all of a sudden, I've got a potential topping tail on the daily chart, coupled with an intraday descending triangle. So it just kind of started to switch my focus a little bit. And then what also caught my attention was I then switched over to the XLP, which is the consumer staple ETF. And Costco is the second largest holding in that ETF. And during this little spike that we saw in the market that started at about 1 o'clock, a bunch of things just kind of spiked with it. And the XLP started to actually hit some quick resistance. There's a pretty big tail, topping tail on some. Actually, that wouldn't be a topping tail because it's not at the top of a huge spike, but has a large wick on the top of its candle at 115. And it's on 356,000 shares traded. And, just to give it perspective of some of the other 5-minute candles that are traded on the XLP, I mean, you're talking 51,000, 58,000, 94,000. So I've talked about this before with the wicks. When I see one of those wicks and it's on some very high volume, and in this case, you're talking, almost 6 times the normal volume of a 5-minute candle, that catches my attention that, maybe that was a little bit of a false move to the upside, or that there just wasn't a whole lot of strength in the overall move to the upside along with the rest of the market. So kind of all of that caught my attention, and hence putting out the put idea on Costco. So now just kind of looking out on the 680 area. That's kind of the line in the sand. And, based upon technical targets, if it were to break this triangle, would put it down into, call it the 675-ish area. Around 676, I'd probably look to potentially exit just in case the full triangle doesn't come to fruition.
Right. So you got 679 on the 60-minute chart there. Yeah, I mean, I could easily see breaking it down through there pretty much erases everything from Friday morning out, right? If you get a breakdown is what I'd be looking at, Brandon. I'm assuming that's where you're getting your 675.
Well, that, and then also the 675 would really be the height of the triangle. So, if you were really looking at it, it's really formed it the whole day. So, for me, when I get a little conservative with, my technical targets, if something, might be 5-point move, I might call it 4.5 to just be a little bit more on the cautious side. So, intraday, you're looking at starting around the 686 area, and then now it's consolidating around 680. So, call it a 5-point move to, a nice psychological, 675 number. So that's really where I'd be looking at my target.
All right. A few other names that you had on your list, Brandon. You talked about Costco, and again, for anybody who wants to take a look, Brandon's comment was up at 8:58 this morning. We talked about the XLP. We talked about Costco. Big tech having a decent day today, and Amazon was one name that was on your list. I don't believe you're involved with that at this point, though, are you?
No, I'm not. And the reason for that is the trade kind of became null and void for me for the day. So, we had talked about this, I think it was last week. Amazon for a while there was kind of consolidating right around that 155 level. And then when we saw the general market pull back, took a pretty nice little dive back down towards that 50-day. And then again, like the market made a real nice bounce right back up to that consolidation around 155. So the last 2 days, it has played around on that level. And, just was thinking again, if the market remained strong and big tech was in favor again, that the 155 area is a possible breakout area. Now, interesting thing this morning, it got to 154.99. So, 1 cent short of that number. And, for me as a technical trader, that's kind of a big deal. Just didn't get back to the number that I was looking for. And, obviously with the market under pressure, just hasn't made sense to really jump into calls on that idea today. So, I think going forward, keeping an eye on that level is probably the next kind of line in the sand for a potential breakout. So, like all the big tech, I'll watch it every day. But yeah, kind of had to take that one off my list pretty quickly today based upon the morning activity.
All right. Is there anything that would get you involved in it?
Yes,
Or is
actually.
it kind of, yeah, okay, go ahead.
Thank you. I totally had that in my notes here and read right over it. Thank you. Now actually on the downside too, it's not too far away, about call it 80 cents away from the 20-day. So on the downside, as long as we don't get a big market meltdown, I would say in theory that would probably be a pretty decent support area. So keeping an eye on that one on the downside, and then 155 on the upside.
All right. Then another big tech play out there. Apple was on your radar on the put side of things. And I would note that Apple was also on the best pullback short list candidates for the TA page scans. So my assumption is that your read's going to be very quick, very close to what lands names on this best long-term pullback list. So what exactly was going on in Apple that piqued your interest?
Yeah, for that one, I mean, I think we all remember the nice little dive that one in particular took, and then saw again a bounce with the rest of the
Yep.
market, and it kind of just felt like a little bit of a bear flag to me. Almost it almost sets up
Even a
like
little
this.
bit of a head and shoulders look, kind of, right?
Yeah. Now that
Maybe,
you,
yeah. That'd be a bit of a stretch, but it's not far off one for sure. But yeah, that's definitely a little ugly descending triangle. That's for sure.
yeah, and it's almost on the daily chart, got almost like a little bit of a mini like ascending wedge on that bounce. So it just didn't feel all that strong. And that pullback that Apple saw was pretty ugly for Apple. So when you get things like that, and when you get that kind of short-term bounce, sometimes some of that selling pressure is still lingering there. You still got some people that are nervous about the stock and want to get out of it, and they take any bounce. So I just thought that one was a good one to keep on the radar. And unfortunately this morning, if you had entered into the weekend with puts on it, you would have done very well to start your Monday. I didn't carry any over, and I didn't really have any interest in carrying over puts on Apple into a 3-day weekend personally. You would have done quite well. And unfortunately, sometimes when you get those big gap downs or gap ups, and I've talked about this before from an options perspective, sometimes they kind of take away a good trade idea for the day. So, you would have done pretty well again if you had bought some puts off of the bounce that it saw this morning. But between the internet and the gap down, I did not jump on that. But I think at this point, that 200-day area around a little above 180, that's starting to look, I think, pretty vulnerable. If it comes down and tests that again, all of a sudden you've got Apple now below all of its moving averages. So, that could create a little line in the sand. And if it didn't hold that level, I would think it would create a pretty nice little leg down on the stock. Again, unless the market is really strong, it will see an automatic default lift to it just because it's such a big weighting to the indexes.
Yeah. Quick question for you. What do you do, Brandon? And because I know it happens to everybody, I just kind of be curious when your equipment does go down. You don't have your charts and everything. Do you tend to pull back on your trading in that front, or what's your emergency backup?
Oh, I usually start pulling out what little hair I have left for starters. drives me It drives me
Yeah.
crazy. In the past, I probably would have, I'm very much the type, if I need to be getting ideas out there, I need to be doing something, or I kind of lose my mind. These days, I kind of try to tell myself a little bit, maybe use a little bit of the time as maybe a mental headspace, or head break. Just it's a tough job trading, and I think sometimes we all benefit a little bit if we maybe don't have money on the table all the time. So yeah, and for me, I had a couple ideas on my high priority list, and I was kind of just monitoring those on my phone. And then when I finally got back up and running, I really just focused on those. I've talked about this before. I probably have 20 names on my watch list. Again, I have multiple watch lists, but the ones that I really focus on each day usually have about 20 names. So this morning I had the 3 that we just talked about, and I was really just trying to monitor those on my phone to see what piqued my interest the most, and really just focus on those rather than all the other names that were out there.
All right. So let's break into then this week's topic, and definitely very pertinent for what we're about to go into, and that is earnings season, obviously. But implied volatility is what we're going to be looking at. Anybody that follows, so if you did do a search on the page for option X, you could see it's all Brandon's trades. Now, there's also activity that goes on in the in-play side, and they post a lot of the implied volatility on some of the names that are coming up to which may call it for reporting earnings. So we could kind of use this as a little bit of a play along while Brandon's talking. If you do an option X search, today's comment was posted at 9:55 a.m. It's usually posted by Carmine. who you all know here from our geopolitical conversations there. You click on that and you can see the pre-options earnings analysis. So some of the terms that Brandon's about to use, you could see it in the charts that we have there, and it might help you just kind of play along with what Brandon's talking about, give you a bit of a visual along with the words that Brandon's about to say. So, Brandon, why don't you give us a little bit of a primer on implied volatility, and then I'll just hit you with a few questions here and there.
Yeah, thank you, Gavin, and thanks for pointing out that additional information. Yeah, I think I told you a few months back now at this point, but yeah, I kind of spent some time going through all that stuff that Carmine also posts, and there's definitely some great information out there. I've used a lot of different websites throughout the years, and frankly, there are quite a few out there that are pretty bad. There are some others that are pretty good, but some of the information that Carmine posts is great as well. So appreciate you mentioning that. So yeah, the topic today, like you said, with earnings season now underway, wanted to discuss another topic surrounding the use of options in earnings announcements. And this isn't specific to earnings announcements, but it's a big part of it, and that's implied volatility. So implied volatility is just an estimate of the future volatility of an underlying asset, stock, ETF, whatever you're trading, based upon options prices. So really, in its most simplest form, the higher the implied volatility equals the higher options premium, and in theory, a bigger expected change in the price of the underlying stock. So this does not predict the possible direction of the move, just the possible size. So, mentioning earnings announcements. So, just generally speaking, implied volatility is going to increase and had an upcoming announcement. Another reason that this actually came onto my radar as a potential topic was I think, as we all know, we had a recent Bitcoin announcement, and you had a stock like a Coinbase, and I did place a trade on it, and I did share it with everybody out there, and it ended up working well, despite the absolute roller coaster that Coinbase stock went on after the what became the real announcement on Bitcoin. So what caught my attention that week was Coinbase had an implied volatility of around 130% when I happened to look at it. And to put it in perspective, kind of how this implied volatility and earnings and events go, entering this week, it was in the 70% range. And for some perspective, a stock like a Meta is in the low 20% range entering this week. So, just again, the most basic thing to look at when you see the higher volatility like that is that you're going to need a very outsized move to make money on your options. And one of the ways that you can kind of tell if these things happen to be expensive is you can compare implied volatility to what's known as just the historical volatility. Nice and easy there on the terms for once in the options world.
Yeah, so just kind of taking a look then, going through implied volatility, you talked about the Bitcoin and Meta changes. Now, do you tend to stay away from these when there's this much volatility at play? I know you usually are more of a single double hitter, and you do so at a nice percentage. But you also have, of course, your Friday lotto tickets that you like to play. The IV, I assume you would view that as, or very high IV would be more of a lotto ticket type play for you. So how do you kind of approach that coming in?
Yeah, you're right. I mean, some of the implied volatility when they reach those levels, and I remember on the Coinbase trade, I mean, I specifically put in my notes, I'm treating this as a lotto. It is, being placed around an announcement, and we're either going to get a really nice, sell the news, or that, long-term bull run was just going to continue as people just keep piling in. So definitely try to keep some of those as a lotto. Sometimes it does scare me away, like you just kind of alluded to. So not always, though. It depends. I think with the thing that you really kind of need to keep in mind, and this is one of the things that I do, is I use it as a really basic warning. So you've got Coinbase, for example. You got premiums over 100%. I just know I'm going to need to see a bigger move on that. And I think it's important. And part of the reason I like bringing this topic up is sometimes it keeps me away, but mainly I just need to start telling myself, hey, I need an outside move for this. And you need to be prepared for the returns to reflect that as the stock, ticks higher and lower. And what really got me when I was first doing options trades is, you'd go into an option on, let's call it like a meme stock, if you will. It would move 30% in a day, and your option return would be 100% return on your money. And that's not a terrible return. I mean, if you double your money on a daily basis, you're going to be quite happy. But the thing is the whole time I was just kind of sitting there being like, why isn't this option moving? Why isn't it moving? And, clearly I was a young amateur trader at that time and probably not fully trained in hindsight, but it just kind of got to me mentally. And I think it's just important to understand, kind of what your expected risk return is, when you're going into these options with the high premiums.
Okay. So, is there anything in particular that might scare you off on these? I mean, obviously the high premiums. Do you have any sort of formula that you work into in terms of what is beyond your scope, or is it more of a feeling process?
For me, it's a little bit of a feeling process. When I pull up an options chain and all of a sudden I see a 250% IV, that's usually something that's coming off of my list. Kind of my max, I would say, would probably be around the Coinbase move. That was, 130%. So I do that. And then you just kind of taking a look at where the IV stands historically speaking. If something's at 150% and the historical volatility is in the 100% range, then yes, that's more expensive, but it's not, necessarily super expensive. And then, if I ever see something like, I don't think it's ever been this high, nor do I think it will be, but, let's take like Meta that I just mentioned. It's in the low 20, percent range entering this week. If all of a sudden that thing's at 200% and it's just such a delta between the two numbers, then again, I'm probably going to want to walk away from that. So those are kind of the things that I look at. And then, again, it's just a little bit of a feel, looking at Coinbase. You knew before you even looked at the option chain that it was going to be expensive. This Bitcoin thing was a big announcement. There's all sorts of games and hype around it and the potential for sell the news versus continuation. I just got to kind of tell myself, like, do I really think Bitcoin's going to move that much and therefore move Coinbase that much? If I was to look at something like an Apple event, do I really think that Apple's new product day is going to be that stellar and, make this stock move 15% in the day? So it's a little bit based around feel and a little bit around my gut and kind of what the actual event is.
All right. Let's kind of take a look at the pre-earnings option analysis that's on there. We have real world examples here. Again, this was, if you do the options lookup, you click on that and it'll bring us to the page. And some of the names on there, we got Interactive Brokers After Hours, Schwab, USB, PLD, and CFG going on. So, Brandon, I feel like this would be a good way to just kind of walk through real quick and what you're looking at and things that would stick out to you. But let's take a look at interactive brokers, right? So today's option volume at 1,283. That seems to be relatively middle of the road. I would say um, for the option volume, it's about 129% of its average. So is that pretty typical to see an uptick in options volume right ahead of the event? Would you say?
Yeah, generally speaking, something like in interactive brokers, just taking a quick look here, it just generally speaking, not heavily traded on the options front. But yeah, I mean, I'm looking today here on my brokerage account, and yeah, I mean, you're talking much heavier than the usual volume. But again, it's only had 2,423 calls that have been traded on the day. So, Tesla, I think, trades a million, calls a day or whatever it
Right.
is. So, just for perspective. But yeah, I mean, you usually see an uptick in the options volume in most things that have an options chain. Again, I also just kind of look at it relatively, the option volume, not IV in this case, but just the option volume in general. What's sticking out to me is there, 15 times normal call volume and not a put has been bought all day. I look at those things in conjunction, with the IV.
All right. Then, as we can see, call volume outpacing the put volume. It's about 0.76 on the day. Do you use put call ratio at all going into an event like this as kind of a tell? Obviously, this would tell us that people are expecting a pretty decent quarter from IBKR, bit of a flag pattern there, so maybe looking for a breakout. How would you use today's put call just in kind of helping you assess the trade?
Yeah, that's definitely those are kind of the main things that I look at is the individual call and put volume, and then put that in conjunction with the put call ratio. Um, just because, you could sometimes see, a whole bunch of call or a whole bunch of put activity, and, you see that kind of on the unusual option activity, but you need to compare it to the other side of the table, in my opinion. It can be great if all of a sudden you see some unusual call activity and somebody bought, 10,000 contracts or something, and you're like, oh boy, somebody's really bullish. And then you actually pull up the whole option chain and you realize that 20,000 puts have been bought on the other side individually. So I think it kind of helps paint that whole picture.
All right. And then we got our namesake here, implied volatility. So you can see running at 29.1% for IBKR. Actually, all five names that are on, we also have the ones listed tomorrow before the opening, which include Schwab, USB, Prologis, and Citizens. 29.1% for IV. Would that, you were talking about 130% for coin, right? So I mean, that is this typical for an earnings implied volatility, would you say?
What was that number again?
Uh, I see it at 29.1% on our chart.
Yeah, that, something like that sometimes intrigues me. Again, you got to kind of look historically speaking, because, sometimes 29%, well, 29% in general seems fairly low for any sort of stock. But, again, looking at the historical volatility and, what it has been, that could in theory be almost double what it is on a normal basis. So that would in theory be expensive. 29% heading into earnings is a little bit on the lower side for things. So something like that might intrigue me as a potential opportunity. And again, I've talked about
It's,
this before. I don't
I would
I
think
don't actually take options trades into earnings, but that's how I would be kind of analyzing and looking at it.
I would think also some of what you're pointing to in terms of this is just not a very big traded name when it comes to options. So that probably factors into a certain degree as well, I'm guessing.
Yeah, absolutely. I mean, some of those options chains, I mean, like Interactive Brokers, I don't think I've ever placed a trade on it. It only trades monthly expirations. Again, there's not that there's anything wrong with this stuff. It just doesn't fit my particular style. But, if you're looking at your call sizzle index that we have here at Schwab, and it's at 4.4 and you've traded 2,500 calls, you could kind of piece together what the typical daily volume on that is. So
Yeah.
very little volume. Sometimes on those two you start to get the larger spreads. Just looking here, I mean, some of the spreads 20, 60 cents, 40 cents. So they're not huge, but a lot of spreads on your Teslas and your Metas are going to be a couple
A lot
pennies here
wider.
or there.
Do the spreads widen out a lot?
On something like an Interactive Brokers, yeah, those become pretty wide spreads. So you got to be careful on those. And then obviously your account's going to show an immediate loss because you're going to buy at the ask, and it's going to show the bid price in your account. So just the sticker shock if you're new to trading options. I remember the first time it happened to me. I think I did a trade on like AutoZone, which is just not it's been a phenomenal stock, but it is not widely traded on options. And there's like $3 spreads on it. And I was like, why did I just lose 40% of my money when I entered this trade?
Yeah, who's the one poor kid that he commit suicide because he had like a loss of $720,000 or something like that. I remember reading something over COVID about that. So
Yeah, I think unfortunately you're right.
So definitely be careful reading your balance sheet when you're putting these, and make sure you understand exactly what that difference is from when you put in the trade to when it's reflected in your balance sheet, to say the least.
Yes, absolutely.
Okay, so implied versus historical, the percentage difference, we got this as the next column. That's 46%. Now, there's negative numbers for PLD and USB and CFG. Can you explain that line to us, Brandon?
They're negative. Sorry, I'm having trouble pulling up because of my my internet issues here today. So I apologize.
So it's got implied versus historical and the percentage difference, right? And we got IBKR at 46%, which I'm assuming that the implied's 29% and the historical would be minus 17. Do I have that right? Or yeah, it's got to be right, because the historical couldn't be 75%.
Yeah, I'm showing on IBKR. I'm showing in the historical volatility in Schwab at 17%. So
Okay, well, yeah, actually, that would be 46% over 17% then, right?
Yeah,
So,
I don't know why it's showing
I'm
negative.
reading that.
Maybe I'll research that after the.
Okay. Yeah, and then and we could circle back and explain these a little bit better. And I probably should have run this by you, Brandon, before we did it, just to give you a chance to take a look at it. I just figured that it would be an easy way to kind of run through and allow people to use the site as a way to do it. Now, the one-day event vol, that's at 6.8%. So explain to us what that entails.
Let me see here. Okay, I think what he is stating there is, I think he's actually talking about the expected move in the actual stock price.
Yeah, exactly. So, and what that's implying is IBKR is expected to move about 7% in the after hours following earnings.
Yeah, and you bring up a great point there, as far as what the expected moves are, and really kind of how to use that information that he puts out, so in its most basic forms, as far as options go, in theory, you need your stock to move that amount before you really start making money on your calls or your puts. So I've talked about this a few times on this call. One of the reasons that I just don't trade options around earnings is, you need a 7% move in a stock, or, in some of these tech stocks, you might need a 10% move in them before, you really even start making money. So one, you've got to call the direction correctly. And two, you need the stock to move that amount. And, again, that's kind of just one of the basic warnings that I use IV for. Am I going out and maybe crunching things to the exact penny when making this analysis? No, but I know when I go and I look at something like, an IBKR, and your implied volatilities on a financial stock or, north of 60%, that's a warning. It's got to move. It's got to, I got to have some sort of conviction that, this stock is going to move quite a bit in one direction. So that's really kind of the whole, premise of really how I use implied volatility, and, really why I wanted to discuss it today.
Okay. And Brandon, obviously, the market is in agreement with you for your near-term bearishness as we are slipping down to session lows here, down at 47.82 level in the S&P at the moment. Nasdaq down to 16,876 here as that slips lower. So knowing that I got shaken out of my short earlier, that would have been a nice move down here. But so just keeping an eye out on that. We'll continue to watch your commentary. I'd be curious. I mean, obviously we're going to have a lot of these names going forward, so might be a fun exercise, Brandon, just when we have these discussions, going through and just kind of talking a little bit about some of these names that are showing up in the list for the M play group, so people have a better understanding of what they're looking at. Go on.
Yeah, no, absolutely. I definitely like that idea because, like I said, there's some good information out there, and again, I try to not overthink trading too much, and I'm definitely not spending all of my time looking for anomalies where something's 1% off of its historical volatility, and is there opportunity there? Maybe if I was an algorithm. But overall, painting the picture, you can start to find some good opportunities when you start to look at those numbers and also the information that's posted in the room.
All right. What are some of the other keys that we need to know about using implied volatility in your trading?
Yeah, so just a couple more points here. So, again, in theory, when these premiums are higher that we're discussing, it would be a time to be an options seller instead of a buyer. There is a lot more that goes into that statement. Just because NVIDIA call options have a high premium to them because they might be, doing an investor day, doesn't necessarily mean that is the time that you want to run out and write a call, which would be again, that would be a bearish play. Sure, you could collect some great premium, but that could move against you pretty quickly. So again, I say that in theory, there's a lot more to that statement, but there are definitely options traders that when they see these higher premiums would switch from buying to selling them. And then the last thing that I wanted to mention is what's known as volatility crush. So basically what volatility crush, it tends to occur after an announcement. So, we've got earnings that are out on IBKR, we've got the Bitcoin announcement, whatever it might be. Then the market has a better understanding of whether this is a bullish or bearish announcement, what kind of effect it might have on revenue, outlook, whatever the announcement, stems from or is about, gives us a better picture of the market when that is out. And what that does is that leads to lower implied volatilities and therefore lower premiums once we have this out of the way. So the easiest way to think about this is you've got the Bitcoin announcement that's coming out. We've got the anticipation, you've got the buildup, and what that's doing is that's driving up your premiums to the lead up of that event. The announcement comes out, and all of a sudden, okay, it's official. It's been announced. Now we know what will happen is all those premiums will start to drop, and that that can kill your option that you were in. So one of the reasons that you might see you pay a whole bunch of premium on an option going into an earnings announcement, and then the next morning, all of a sudden, that premium value can start to drop. That has to do with volatility crush. So it's just another kind of options term, and frankly, a way that I've been hurt in the past, not really understanding, why my premium was dropping so quickly at the end of an announcement or the day after an announcement. And, it can just be a little bit frustrating where if, again, you call the direction of the option correctly, but then eventually your premiums start to fade and they'll start to hurt your returns. So you need the stock to continue climbing higher or lower in order to keep driving up those premiums.
All right. Just keeping an eye here on the markets, Brandon. Continue to drift lower. VIX starting to pick up. I know I was looking. There's a huge order, Brandon. You see that order for the VIX at the 45 level? Looks like there's, I don't know, what was it, 43,000 calls at the VIX 45 level, the March 2024 VIX. You seeing that?
I'm not seeing that. Let me poke around here. I'm seeing a bunch of put activity on the VIX today, though. Couple decent little chunks actually coming in.
Well, if you were positive or if you're bearish, then you'd be buying calls on the VIX, no? Right?
Yes. I'm sorry.
Yeah. No, all
Haven't
good.
traded the VIX in a while. Yes,
Right.
you're absolutely correct there.
Because
Sorry for that.
when you're trading the VIX, it's the inverse of the SPX, so you're basically
Yes.
shorting the SPX. But you can see 1431. We've come up to this level, got up to 1449 on December 21st. And 1458 on January 5th. That was when Armageddon was happening, Brandon, when we pulled back about 1%. And but yeah, no, it's an impressive move here in the VIX. So we'll continue to watch this playing out here. Nasdaq naturally also getting hit on that, dropping down to session lows around 16,867. So all right, it's a little bit of excitement while we're chatting in the back here, Brandon. 47.85. That was the overnight session lows. We'll see if they could get back above it. All right. What else is there to discuss on IV here, Brandon?
I think that hit all the points. Again, I guess I just kind of maybe wrap things up with, again, just kind of saying, if you see these high premiums, I'm not saying, run, stay away from something. It's more just kind of having an understanding to, I guess, reduce the frustration. Again, I know there's a lot of people out there that are starting to learn options. And I just tell you, I got so frustrated as a new, frankly, untrained trainer of, going into some of these options. All of a sudden a stock moves, 30%. And I'm like, oh, I'm rich. And then I'm like, I made 20% return on this option. Why did I take on, all that risk of putting up my capital? So again, I think it's just kind of gaining a further understanding of the options world. Again, not trying to scare anyone away from doing a Coinbase trade or anything because the premiums are high.
Well, I think your primary point, if I'm reading it right, Brandon, is if you do see a high implied volatility, do your homework and double check on why right?
It-
I mean that's the primary reason. Do you have searches set up where you're just kind of looking for high implied volatility numbers to be sent to you?
I personally don't. Again, that's kind of a function of just me kind of sticking to my lane. I don't necessarily think I'm the number one trader when it comes to finding the meme stock that's got the huge, premiums to it. So, it's just not my strong point, so I don't do it. There are definitely a lot of traders out there that, again, some of the best traders, they profit off of volatility. So, there are screeners and stuff out there. I think most brokerage accounts will have them too, where you can go and screen for high volatility. And, if you're looking to play those names, there's definitely ways to find them. I just don't, again, like you said just a minute ago, I kind of mainly just use it as a warning for myself. There have been times where I've gone out and I've been like, well, why are these premiums double on Meta? And I'm like, well, maybe I should just take a step back and do a little bit of a further research. And, maybe you find out about a potential event or some news or whatever it might be hanging out there that you didn't necessarily, catch when you're a chart watcher because you're looking at candles and moving averages all day long. So yeah, again, for me, it's been kind of more of just a basic warning sign. Do your homework.
Yeah, no, it's a good warning sign for sure. All right, Brandon. Well, I think that will wrap up this segment at this point, right? Anything else to add?
Yeah, I think that's about it. I'll just add one more quick point here on
Shoot.
Costco since I've got everybody here. Actually got a little bit of a breakdown of that 680 area. Like you said, I think the market has given me a little help as it pulls back here, but
Yeah.
a little bit of selling volume actually kicking in as it broke below that triangle,
Yeah.
which is exactly what you want to see when you're playing technical patterns. So right now, again, 675 is kind of my main area. The 200-day on the intraday is at the 677.5 level. So I want to be mindful of that. But yeah, just keeping an eye on that and hoping to get a little bit of a further breakdown here.
Okay. Sounds good. All right. Well, Brandon, as per usual, thanks so much for coming on here and taking us through the world of implied volatility. We'll add this to the long list of webinars that you've been providing basically on the options trade, and always very helpful. I know we're getting great feedback on it, so much appreciated. And we will be talking to you soon enough.
All right. Thank you, Gavin.
All right, take care.
You too.
All right, all right, everybody. We're just going to shut down momentarily here, and then we'll get everything back up and running, uh, and take a look at what's going on in the broader market here as we see a little bit of a late day breakdown.